Welcome back to Insibles, everyone. So I'm going to go down with you guys in the S&P 500. Again, this is the SPY. In case you are wondering why we have been getting this rally for the last couple of days, there are two reasons. One is a technical indicator, and two is because we have been getting negative job reports. Again, Jerome Powell mentioning in his last two meetings that he wants that continuation on an increase in unemployment. So bad jobs data is showing us that the Feds have more of a reason to possibly pivot. Again, this is speculation on a possible pivot. Tomorrow we have ISM data coming out 30 minutes after market open, just like we had today with JOLTS jobs data. And then on Thursday, we have initial jobless claims coming out an hour before market open. And the most important of them all is on Friday, we have non-farm payrolls. This is going to be very key. It's an hour before market open as well. So our question is, where exactly may we be headed next, as we have three more job reports coming up, and we are diverging here on the RSI that we mentioned from yesterday. Again, getting higher lows here on the RSI as we are getting lower highs here on our price action, showing us that confirmation. And as we are diverging here, we do have our EMA lines just looking to see if they can cross to get more bullish momentum. I'm going to go over exactly what we're looking for here, guys. Now, before I jump into this, you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, again, getting a gap up here after we did have a spike yesterday from a negative jobs report, and today following with another negative jobs report. This is very key that we've been watching for this again, because Jerome Powell mentioning in his last couple meetings that he wants a continuation on an increase in unemployment, and with negative jobs reports, giving the Feds more of a reason for a possible pivot if they listen to our jobs report here at this point. Again, this is only speculation on a possible pivot that the Feds would listen to. We're going to see exactly how the Feds react. Is going to be very key. Now, jumping into how much strength we have to the upside, as you guys can see on our MACD tracking our sell pressure, as you guys can see, we do have that continuation on decreases in sell pressure that we were looking for. And as you guys can see, our EMA line is curling up now, and just looking to see if we can cross above our 26 EMA here. So again, we are going to be looking for our 12 to cross back over our 26 here. If we do cross, then we do have more room to run to the upside, and we will possibly be testing our 20-day moving average at that point, and possibly looking for either a rejection or a possible continuation on higher to possibly retest our 20-day moving average to see if we can continue on higher and possibly curl back up here with our 20-day. Again, if we do get that continuation on bad jobs reports throughout this whole week, in my opinion, then we can easily start to continue on higher here. But again, looking for confirmation, as our 20 would have to cross back over our 50 will be very key, and we need to make sure we are respecting and not getting bearish setups on that possible rejection and dropping below our 20 at that point. We need to make sure we are respecting it, and then continuing on higher, looking for confirmation is exactly what we're going to be looking for. And again, our technical reason, if you guys were just looking at indicators alone without the jobs reports, if you guys were looking for divergence here, again, mentioning this throughout the last month here, looking to see if we can get confirmation with higher lows here as we were oversold, and gaining lower highs here on our price action is exactly what we're looking for. And we did get that confirmation, again, getting lower highs here on our price action as we got higher lows oversold here on the RSI. Mentioned that confirmation yesterday that we did look for, breaking out of oversold territory, and that's exactly what we had yesterday. We had confirmation on that, and we did continue on with the gap up on this major pivot that we had on divergence here. So now our question is, can we continue on higher? We are going to be looking for our EMA lines to cross back up here to see if we can continue on higher. We also will be looking to see if we can get some buy pressure coming in here, looking for that continuation on buy pressure as our EMA lines are crossing up here is exactly what we're looking for from here. We could easily cross back down like we did prior. As you guys can see here, we did cross up. We didn't continue on above the median of our MACD. We did get a rejection. We did come back down, and then we had confirmation that we were going to continue on higher from here, as we did have higher lows here overall here on our EMA lines. So again, just keeping an eye on this to see if we are going to continue on higher. If we're going to get a continuation on bad jobs reports to possibly continue on with that reaction to the upside will be very key. And then to see if the Fed will listen to this negative jobs reports that we have been getting will be very key. Maybe we possibly cross back down, because the Feds don't care at all. They say that we're going to continue to increase in rates regardless of how the jobs reports are. That would be a negative outlook. That would be what we're looking for as far as that rejection to the upside. Just being careful. But again, keeping an eye on this jobs report data is going to be very key going to tomorrow, Thursday, and Friday. So again, as far as intraday, just looking to see if we do continue on higher with this ice cream bar candle, typically a very bullish candle with our EMA lines just looking to see if we can cross. Unless we get a major rejection here, then we could continue on with pressure. But again, from there, we need to make sure we are careful as we are testing our key resistance that we have been looking for here on our 20-day moving average. And also we are just testing the lower end of our gap down that we had previously that we were looking to see if we can continue on past. We also did have a rejection to the upside at this point. We are testing this level here at 378, looking to see if we do have room to run to the upside. In my opinion, we do have a lot of rejection coming up at around 383, 385. So I definitely would be careful at that time, looking to see if we can get confirmation above our 20-day moving average, trying to respect it if we are going to continue on higher past that. Again, short term, we do have momentum to the upside. We possibly even open higher going into pre-market tomorrow, and then we possibly cool off. We'll see exactly how the market reacts to tomorrow's jobs report, again, 30 minutes after market open. And then the next couple days, we'll be looking at how our momentum is going to be leading into those jobs reports. And from a swing perspective, in my opinion, I would be looking for a possible rejection, since overall we do have momentum that has been continuing on lower. That does not mean that we can't have a pivot here, but at this point, I would just be looking for a possible bearish setup, possible doji candle coming out with indecisiveness, with maybe we get a positive jobs report coming out of the next three that we have. We'll see exactly what happens. But again, looking for a possible rejection for that continuation on lower. Maybe an evening star comes out here with the gap down, closing again below our doji candle, rejecting our 20-day moving average is a possible bearish setup. That is what I would be possibly looking for if I was looking for that rejection to the upside at this point. And again, if we're looking for that continuation on higher, like I said, just looking to see if we can continue to respect our 20, or else we are not getting that ultimate momentum. We need to make sure we are careful playing to the upside if we are leading into indicators, especially key indicators that we have been rejecting. We need to make sure we are careful. Again, we do have, again, strength at this point. We could possibly blow past this 20-day moving average and get a bearish setup to continue on lower. So just looking for a better setup from here is very key, as we are leading into a lot of resistance. Again, we do have room to the upside, but not a ton of room to run to the upside. So we need to make sure we are careful, looking to see if we can continue to respect our 20-day moving average is going to be extremely key here. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables room, again, guys, we mention every single volatile major breakout that is worth looking at. If you guys want to see one of the major breakouts that we had today, we had a major breakout today with BTBT out the gate, jumping up over 70% from pre-market highs, mentioning that we needed to break above pre-market highs. That's exactly what happened. Again, go to instables.com in the description below, and only for $15 a month, you guys will never miss a breakout like today again. And again, all of you instables that come over every single day and support the channel, I appreciate you guys. We're going to continue to go at it and stay patient. Take what the market gives us. Again, SPY very strong here. If we are looking at the DXY, we mentioned from last week, we were looking for weakness on the DXY, mentioning that we were looking to see if we were going to come back and test our 20-day moving average. That's exactly what happened, and we did get weakness on the dollar, which gave us a very nice spike. Now testing our 50-day moving average, as our 20 is still over our 50 on the dollar, looking to see if we will continue on higher, or if our 20-day will start to curl down and possibly curl back down below our 50, which will give us more strength possibly on the SPY. So again, just keeping an eye on that. But again, just taking what the market gives us. Again, very nice breakouts today, in my opinion. I thought today was pretty good. So again, just taking what the market gives us, staying consistent is exactly what we will continue to stay focused on. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.